Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra, and joining me today is Mangalam Malu. Continues to be a day of a lot of pressure on the markets. Nifty is down 240 points. So a lot to catch up on. But first up, let's start the show with the top headlines.
Somber global mood leads to a decline on Dalal Street. Market slipped to the lows of the day. Sensex and the Nifty, as well as the Nifty Bank, all falling over 1% each. All sectors, barring pharma, trade in the red.
Walk hard gains as the street cheers its positive commentary at its analyst meet and gives its restructuring plan a thumbs up. The management expects to save $12 million annually by restructuring its US business and maintains the promoter remains fully committed.
Mirza International gains as the NCLT greenlights the merger of RTS Fashions and also the demerger of its branded business into Red Tape.
Consumer durable good makers like Voltas and Symphony gain as an early heat wave is expected to boost demand for air conditioners and coolers. Symphony's management tells CNBC-TV18 summer buying has already begun and they expect a positive spillover in the first quarter of the next year as well.
For a 240-point decline on the Nifty, it is below that 17,600 mark, as well as the Nifty Bank, which is leading the decline, down almost 650 points, holding 40,000 by the skin of its teeth as we speak, and that's the one that's putting pressure. 40,000 is a psychologically important mark. The market trades much weaker on the Nifty Bank, and as we speak, perhaps if we speak for a little longer, maybe it may break that 40,000 mark as well, where it has gone below that mark. We have Samit Chauhan joining in. Samit, from the word go, there was weakness on the Nifty Bank, and now it continues to weaken further. It's below that 40,000 mark. What does one do?
Good afternoon, Mangalam. See, overall, market has been consolidating of late, but, the kind of sell-off that we have been witnessing since morning, it certainly does not bode well for the bulls. Nifty slides below 17,600 and Bank Nifty is now somewhere around 40,000. The overall, the price action has been has been so encouraging. So, but, with a monthly, series getting expired tomorrow itself. Market is extremely oversold now. If you look at the PCF for Nifty, Nifty it is somewhere around 0.8, and for Bank Nifty it is extremely oversold 0.5. And importantly, 40,000, 39,800 for Bank Nifty we are seeing as a strong support. So, one attempt of rebound at current level cannot be ruled out, but whether that bounce back will be sustainable or not, that the time will tell. But as of now, we expect one attempt to give a sharp rebound from current level. But overall, if you see Bank Nifty, till the time it remains below 40,500, the overall trend has to be negative. Only if we see a breakout beyond 40,500, 40,800, we would see some sort of recovery overall in the market, and the sentiments would also get improved. But as of now, one should stick to stock specific moves and keep a closed up tab on this important support level. For Bank Nifty it is 40,000, 39,800, and for Nifty it is somewhere around 17,500, 17,450.
Okay, at 7,583 on the Nifty right now. Samit, you said we have to be stock specific in a market like this. What are your top trades?
So we have mixed ideas, one buy, one sell. Buy would be from the pharma space. Glenmark Pharma, seems to have found its mojo back. Recently, we witnessed a good V-shaped recovery from the levels of 370. Stock is now trading around its multi-month highs. The kind of price and volume activity that we are observing, it seems that the stock is likely to give a breakout beyond 450. So we are anticipating that move. As a buyer, one can buy at current level, keeping a strict stop loss somewhere around 427, and soon we would expect this stock heading towards 462, 465. On the short side, we like Amara Battery. The stock has been, consolidating of late. Today we are seeing a breakdown from a rising trend line somewhere around 570, 572. So this stock is likely to continue its weakness. 540, 542. These are the next levels to watch out for. So as a trader, one can keep a stop loss somewhere around 582 and expect a move towards 542.
Okay, all right. Samit, thank you so much for joining us. So those are some technical trades as far as our markets are concerned. Mid-caps are under a lot of pressure today. The advanced decline ratio comfortably in favor of decline. So let's talk about our segment, Mid-Cap Movers. We have Vivek, as always, to take us through the mid-caps that are moving around in trade. Vivek.
Well, thanks for that. As you rightly mentioned, a clear session where the declines are outpacing the advances by quite a huge margin. Like we've been highlighting throughout the day, it's clearly markets are anticipating and bracing themselves for a very strong summer, and on the back of that you're seeing quite a bit of buying action across all of the companies that either provide cooling solutions or AC makers. So today Symphony, Voltas, Blue Star as well as Johnson Hitachi, all of them moving up on very strong volumes. Another pack of the market that's moving up is the fact all of the jute companies, on the back of proposed packaging norms that have come in, all of the stocks moving up today with very strong volumes. So Cheviot, Ludlow Jute as well as Gloucester, all of them have moved higher in today's trading session. Some of the pharma companies have actually seen a little bit of a bounce back from the recent lows, Wockhardt on the back of news flow as well as some data coming in. Aurobindo Pharma as well as Ipca Labs today recovering from the recent lows that the stock has seen. Some stocks that are in focus on the back of very strong volumes that you're seeing when you're comparing it to the 5-day or the 20-day average. TCNS Clothing, it's been a very volatile ride for this particular name this week. Sanghi Industries as well as Thermax moving up on good volumes. Lastly, some of the stocks that are losing and losing with quite strong volumes. Capacity Infra down almost 10% in today's trading session. Insecticides India also moving lower. RHI Magnesita, this particular stock has seen continued weakness, as well as RateGain Technologies today is moving down on strong volumes.
All right, Vivek, thanks a lot for that. We will monitor all these trades. In fact, we have more stocks declining than advancing, but Vivek did manage to pull out some of those jute stocks which were buzzing around as well. Take a short break, come back on the other side. We'll get chatting with the management of Fila India. Madhusudan Bhagaria, who's chairman and the managing director, joins in to talk about their third quarter performance, but more importantly, the outlook going ahead.
Welcome back. As promised, let's get into a conversation with Fila India. It is in focus. The management recently said China's continued zero-COVID policy adversely impacted the Indian polyester industry over the past few months, and a weakening rupee also weighed on its earnings in the quarter gone by. The stock is lower by 1.5%. But what is the outlook now since some of the relaxations have kicked in? Madhusudan Bhagaria, the chairman and managing director at the company, is joining us now. Mr. Bhagaria, good afternoon. Thank you for joining us. Well, you've been telling us how Chinese goods have been getting dumped into the Indian market at lower prices, and that is something which has been impacting revenues and margins for you as well. But how have things been now, January onwards, since we have seen some relaxation there? Your gross margins and margins have improved on a quarter-on-quarter basis. How is quarter 4 looking, and will you be able to see further improvement in margins, say from these 4% levels?
Yeah, good afternoon. After China opening up, definitely the margins have improved. But it will take some time, because now after the Chinese New Year, the workers are coming back and the demand is still to come back in China. But yes, we can see some improvement in the margin, and Q4 definitely will be much better than Q3. And going forward from next financial year, we expect it to be back to normal. I mean, we should have a EBITDA margins very close to double digit, if not double digit.
All right, because the last time you joined us, Mr. Bhagaria, you had said that you would see about 6 to 7% margins in the fourth quarter with double-digit margins in the next financial year. So we would, assume that you are holding on to that itself. I wanted to know about the exports, because the last time you joined us, you said that the export market was weak as well. You expected it to be around 5 to 6% of your sales in the fourth quarter, with it inching towards double digits, low teens in FY24 as well. Do you still maintain that?
Yeah, we are moving towards that. Maybe we would be 4 to 5%, maybe a percentage lower, because still export market is still under China. China is still giving it a better pricing. But yes, it has improved from Q3, and we'll have a better volumes in Q4. And from Q5, I think we should be around 8 to 10%.
Okay.
I mean, next financial year, not
yes.
Q5.
Yes, of course, we get that, Mr. Bhagaria. I wanted to understand, when you're talking about Chinese prices being, more attractive than the Indian manufacturers, what is the difference? What is the dumping price? If the spread is higher, do you think it will take some time before it equalizes for both the markets?
See, the main reason is that China, they have their own PTA, and the PTA is in abundance. So the PTA, which is the major raw material for us, they get a better price on the raw material. So almost like 7 to 8% their pricing in that PTA is much better than us. So they get around 5 to 6% extra margin because of the price of the raw material. Otherwise, cost of production wise, we are quite competitive. And also see in imports, we have a 5% custom duty on the yarn, and even on the raw materials, the custom duty is 5%. Whereas for the local market, we have to pay some extra taxes, which the government gives back in the form of road tab. On our product, road tab is around 2.5%. So technically, we are 2.5% worse off than the imported goods because they don't have to pay those local duties when they are imported. So we are asking the government to give us some protection, either to reduce the custom duty on a raw material from 5 to 2.5%, or on finished product, make it 7.5%. So we should be at a level playing field, at least in the imports.
Have you heard something back from the government? I mean, you have made your recommendations, etc., but have they spoken to you, or has the industry gotten any response from the government on the possibility of something like this happening?
They have understood the thing and they say they will take it up, and because you see it takes time to happen these kind of things. We have put it on their notice because as per their policy also, when they are giving road tab, so technically road tab is also a kind of tax which the Indian manufacturers are paying. And when you import, you are not paying those taxes. So at least that much protection should be given to Indian manufacturers. Otherwise, they are at a disadvantage compared to imports.
By when do you think there could be some sort of resolution or some action on this? I understand it takes time and it's difficult to say, but I mean, would you have any inkling?
I think maybe in 1 or 2 quarters we should have some change in the custom duties.
Okay, all right. So that is on the spreads or the benefits that the imported goods are seeing versus domestically manufactured products. Give us a sense of your expansion plans. Now we are towards the end of this year. What is FY24 looking like? You have some projects which are coming on stream. What kind of capex will you do in FY24? What kind of debt do you have in your books?
The end of FY23, I think we will be close to 300 crores of debt, which will be like 0.2627 to our network. And FY24, the projects which we are doing a very small expansion where our POI capacity would go up by 25-30 tons. And we are also adding one more stream of polymerization, which is the cationic yarn. So that we will add, but that will come towards the end of FY24. And the total capex in both the things would be around 60 to 70 crores, not much. So that we will fund through internal accruals. So we are not raising any loans in FY24 as of now. Also, we are doing, I told earlier, some research on the recycling, chemical recycling. So that is also taking good shape. So maybe after Q1 of FY24, we would go for that project. That project cost would be around 170 crores.
So the 70 crore capex would yield you asset returns and asset turns and EBITDA margins of what?
The 70 crores would give a top line of around 220 crores and an EBITDA of around maybe 25 crores.
All right, 10% margins and 220 crores revenue. And the recycling plant you had spoken about as revenue potential of almost 400 crores, right?
Yeah, and there I think EBITDAs could be around 80 to 100 crores.
80 to 100 crores. Okay, so that will be ready by when? The recycling plant?
Yeah, once we take it up, I think it will take at least 15 months for us to bring it into production. So maybe somewhere second half of FY25.
All right, so developments happening in the space and some quarter-on-quarter recovery as well. Thank you, Mr. Bhageriya, for joining us and making sense of what's happening on the ground as well, as far as the polyester industry and your own company is concerned. That's the word coming in from Filatex. So we'll slip into a short break now. And the other side, in our special segment, Midcap Spotlight, we'll put focus on Mirza International. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. While the broader markets are under a lot of pressure, 1% gone on the Midcap index, actually more than that. We have a couple of stocks which are buzzing around in the broader markets. Mirza International is one of them, and this is our Midcap Spotlight as well. Mangalam, why are you tracking it?
Well, Mirza International is, for everyone who doesn't know, is the company that also makes the Red Tape brand of shoes itself. The NCLT has gone ahead and approved the company's scheme of arrangement. The scheme of arrangement itself was announced in November 2021, so it takes about a year for companies to get that NCLT approval. The stock is up to 67% since the time the company had launched that scheme of arrangement itself, because it would be a value unlocking coming by for their Red Tape business itself. What is the scheme? Amalgamation of RTS Fashions Private Limited, a smaller business which will come into the fold of Mirza, but at the same time they will demerge and list separately the branded business into Red Tape. And that's where the value driver is, because it accounts for nearly 55% of their sales and 50% of the profit when they had announced this demerger. And as of 9 months FY23, if you just take a look at it, Mirza International has done revenues of a little over 1,550 odd crores with 15% margins and 130 crores net profit. How much has Red Tape and the other branded business done for them? 600 crores of revenue, little under 50% in terms of contribution, and 80 crores of operating profit itself. The other factors that are working for Mirza International is the fact that their debt has come down from FY20 levels of 288 odd crores. The debt stands at just about 80 odd crores, and it's trading at a discount as compared to other footwear players as well. If you just take a look at it in terms of market cap and sales, Metro has a market cap of 23,000 crores, and the trailing 12-month sales are just about 2,000 odd crores. Look at Bata, 18,000 crores of market cap, 3,300 crores of sales. How does Mirza International fare? 3,500 crores of market cap and 2,000 crores of sales. Why is it that the company is trading at a discount? Well, one of the factors could also be low margins and a lot of commoditized business in them. If you just take a look at the margins, Metro has 33% margins, Relaxo has about 12% margins, Bata has 23%, Mirza stands at 15%, so among the lower end in the industry. If their margins improve for the Red Tape business and the Red Tape business is separately listed, then maybe they could unlock some of the value out there. The stock has rallied almost 3 times in the last 12 months. Let's see where it goes. We have a couple of other approvals pending as well, which is the exchange approval, etc.
Okay, 3 times in the last 1 year. That's a big rally that we've seen in Mirza International. Thank you so much, Mangalam, for putting that into perspective. For now, markets at the day's low. It's almost a 300-point downtick on the Nifty, so we'll keep tracking markets for you. For now, it's a wrap with this edition of Midcap Radar, your stocks when we return.